All right, what's up, everybody? This is an executive conversation. Although, because we have so many loan officers and producing leaders, I always try to tailor the content for the street. But Kristen Besterly and I are writing an article right now called the State of the Mortgage Industry Halftime Report. And so I'm interviewing people that I think are change agents in the industry, people that I think are really evolving the industry forward. And at the top of my list is Owen Lee, the CEO of Success Partners Mortgage. He's a board member of the MBA, and he is the vice chair of the MBA, which means he is donating a lot of time and which is money for our industry, advocacy and just organizing. So, Owen, thank you for that service, my friend.
You're welcome. You're welcome. And thank you for having me. I appreciate it.
Yeah, and also, folks, he's become quite the LinkedIn influencer. If you want to hear from a guy who runs an IMB, one of the top IMBs, who also is very involved in what's happening in Wall Street, or not Wall Street, but on Washington, and the NBA, like follow this guy. Like he's someone that will make you smarter.
Well, if I can just say one thing about that, Dave, what I try and do with my LinkedIn posts, and I appreciate the compliments that everybody gives. It always makes me chuckle because social media is like not a comfortable place for me. It's not my first place that I go. It's not my happy place. We'll just put it that way. But what I really try and do, especially with the platform that I have with the MBA and the lobbying and all that kind of stuff, what I think that we need more of is to take all that Washington, D.C. and that regulatory stuff and just move it to where the people are, right? I run an IMB, Success Mortgage Partners. We're in 43 states, hundreds of employees. And I want to know, I want to make the connection between what's happening there and to their lives, to the lives of loan officers, to producing branch managers, to people that are in the industry. Talk about how that might affect your pocketbook, how that might affect the economics of the industry that will affect you. I want to make that connection. I love the MBA, but one of the things that I think the MBA does poorly is to talk about and make the connection to the very important work that they do to the Main Street person, so to speak. And I've got hundreds of Main Street people here at Success Mortgage Partners, and LinkedIn has allowed me to connect with thousands of people across the country, and it's really been great.
So, guys, the action item on that is one, if you are a leader in this industry, to tune into that, knowing that that's his goal. And by the way, I don't disagree that there could be a better job of connecting, the work the MBA does to people at all levels of the mortgage industry. And so knowing that that's where your heart is and that's what you're doing, guys, we can all amplify that. So really, as someone who's made a living in the mortgage industry, both as an operator, an owner, and now as a partner to lenders, we really can amplify that. So make sure, one, you watch it, give it a like next time you see him, help him with the algorithms, and then share that. Like if you want to share it with your leadership team, if you are a leader and you think, oh, put your voice around it and share that. So I actually hadn't heard that. Now that you said that, it will give me even more context and value in what you're doing. So thank you for that, brother.
Oh, you're welcome. You're welcome.
All right. So the way I am writing the report, or Kristen and I are writing it, is like, think of it like a ball game, whatever ball, football,
Mhm.
and there's a halftime. And
Yep.
and if you were coming in, and everyone who's listening, you're a coach, and here's some things we didn't expect. There's a lot of noise, but there's some signal. So I want you to call out, like, what's the signal so far in the first half of 2025 that, and let's speak to executives. Like, this is what I think is most important. This is the signal. And then we want to win the second half of the year. And some of
Yeah.
that, like, what can we do to do more loans now in this pretty difficult market? Rates are not participating the way we want. Like, what can we do to win the second half?
You're
And
not
some of those things
cooperating.
may,
Yeah.
yeah, some of those things may be more strategic. Hey, we need to do this
Yep.
now so that by 2027 we're in a better position. So what's the signal in 2025 from your perspective?
Yeah, so I think the first half of the year has been dominated by the new administration, right? And how that has affected interest rates. I think interest rates are riding about 50 basis points higher in rate than where most people thought they would be on January 1 at this point in time. And I think that's because the new administration is breaking so many things, right? And this is not a political statement. This is not right, left, conservative, liberal, red, blue, whatever. This is just what's happening. They're breaking things in Washington, D.C. that haven't broken a long time. They're breaking the world trade order that's existed since the end of World War II, when we said, sell your goods here so we can make your economy strong and you'll help us with the Russians during the Cold War. That's gone on for 70, 80 years, and they're breaking it. And the taxes and all these things, people don't know what it's going to do to inflation. So when people don't know what's going to happen, they get conservative, right? And I think we're seeing that happen. What you're seeing, the rates stay within a range, but have violent swings within that range, right? One day we're up, one day we're down 50 basis points in price. And I wonder when I drive home that night, what do we know today that we didn't know yesterday that caused the rates to move 50 basis points in price? That used to be a huge move when you and I were younger in the industry, Dave. Now it's Tuesday, you know?
Right.
And so you're seeing these violent swings. So I think that has an opportunity to calm down the second half of the year if we get the so-called big beautiful bill, through wherever it's going to go in Washington. I think that will uh, uh, provide some clarity. We'll see what happens with tariffs, but I think it's going to take a while for the financial markets to trust this administration. And so, I think maybe there's some opportunity for rates to come down a little bit the second half of the year, not a ton, 25, 30, 50 basis points in price. But the one other thing I'd say in our business is I think this market is also resilient. Um, Even though interest rates are riding higher, we've been fairly busy at Success Mortgage Partners at our company. I'd say more than fairly. And I think there's a pent-up demand after 3 years of a lot of people sitting on the sidelines where they just need to move. They need to do something. Their life is moving on, and they can no longer not change with their life because in June of 2020, they locked in a killer interest rate. So you're seeing more homes on the market than we've had at any point in time in the last 5 years. And if we get any downward pressure in rate at all, I think the market's really going to respond favorably.
Okay. So that's some notable things for the year. On a scale of 1 to 5, 5 being it's a big deal uh, for mortgage and for local referral-based loan officers and companies like yours who
Hmm?
have a sales force of local referral-based loan officer. Where do you rate the big moves of Rocket? I first of all I see that as smart money, big money is going on the offense. They now are going to service 1 out of 6 mortgages in America as the transaction is, finalized, and they're going to have a purchase funnel of 60 million monthly eyeballs. Where do you rate that? I was like, that's a big deal. Is it a 5? Is it a
On a
2?
scale of 1 to 5, to me, it's a
Yeah.
6.
Okay.
Um,
Big deal.
it's a huge deal, right? And what is this really? This is a bet on your end of the industry, Dave. This is a bet on technology, right? I'm going to create a universe, and the universe is going to consist of Mr. Cooper and their gigantic servicing portfolio, plus the considerable servicing portfolio that Rocket already has. They're gonna put Redfin in the mix, right? So that gives them eyeballs on everybody that opens that app and everything they do in that app. And if you think somebody goes to the mortgage calculator inside of Redfin and searches how much a $400,000 house's mortgage payment is going to be, and they're not going to get some kind of sales pitch from someone that works at Rocket 24 hours later, you're sorely mistaken, right?
No,
But
not
here's
24 hours later. Like it's going to
yeah,
be
24
minutes.
seconds later,
Yeah, yeah, there
right?
you go.
Yeah. And but here's what I also think. Um, opportunity, opportunity, opportunity for all of us. That's what I would say. I'm excited about this, and I mean that sincerely. If as an old professor I had in law school used to say, circle the if in red and highlight it in yellow and underline it in black Sharpie. If you belong to a company that adopts technology, you can win in the new mortgage industry. If you work with a company, these technology tools, there are versions of them that are accessible and affordable to companies like ours, a mid-sized company inside the mortgage space. And if we adopt them, we can win. And that is, Rocket being out there spending billions of dollars to create this environment is proof of concept of that. So there's plenty of room to win. The mortgage business is one of the most fractured businesses. I mean, diffuse, right? There are hundreds and hundreds of providers. The number one provider has 8% market share, or whatever the latest statistics are. There's a lot of opportunity for us to win if we seek and seize that opportunity, which I think is mostly an adopting technology play.
Yeah, well, this is perfect segue to like let's consider this the halftime in this conversation. We've
Hmm.
laid out some signals, we've laid out some strategies, we've laid out some risk and concerns. Tell me if you agree with this statement. Like as a leader of an IMB, and if you're watching this, you can't control rates. Like we wish we could control
Right.
that, but that's uncontrollable. But we can control what we measure, and we can control what we put our leadership energy into.
Yep.
And so, my one of the no doubt, because I've had enough of these interviews now that I know that what's going to make the halftime report is that one, lenders need to start measuring maybe some things more aggressively that you haven't before. Like one of the things we're doing, I mean, by the way, full disclosure, you're a customer of ours. You have the full Mortgage Coach Next Gen platform, both our data
Yep.
services and our presentation. But like we should start, like we're pretty obsessed with measuring volume. Like we
Yep.
are a volume driven industry. Loan officers are obsessed with looking at the scorecard of volume and how many loans they closed. But maybe
I
we
hadn't noticed that. That's
yeah, right. Right. There's actual magazines that are like,
that's
I'm
right.
I'm the top 100. But what about
Yeah.
getting obsessed with conversion? Hey, credit
Yep.
reports that are more expensive than ever.
Yeah. And
What
if you haven't
percentage of,
heard, those cost a pretty penny.
and going up. Um,
Yep.
why don't we measure how many of those are getting converted into loans and then measure like gross margin per loan officer varies
Yep.
between price concessions and just gross margin. And Matt Clark, the president at Churchill,
I know
we're
Matt well. Yeah. Great
yeah,
guy.
we're him. He, by the way, he was one of my interviews as part of this article.
Uh-huh.
He did the numbers, and the loan officers that are delivering Mortgage Coach at the point of sale are 27 basis points more profitable and 10% more conversion. And so I'm one of the things I'm really advocating is like we need to upgrade what we measure, and we need to upgrade LO adoption. Like that's just one touch point. When rates are delivered to the consumer, that's just one touch point. But if we measured the impact of that touch point more, we can become more profitable. Any thoughts on that?
Yeah, you definitely, in order to get through the last 3 years, and in order to successfully emerge from this tunnel that we're in, whether that happens in 3 days, 3 weeks, or 3 more years, you have to measure things and be intelligent about things that you haven't before. So I agree with you 100%. All volume is not created equal, right? What's the margin on that volume? What's the expense of the loan officer or the branch that produces that bond? Do they spend more money? How are they with their resources? How many, what's in the pipeline of those processors? How many concessions do they give? How do those loans perform on the secondary market? What's the all-in cost against that revenue? What's your cost to manufacture? If you can't name your cost to manufacture in 5 seconds or less, you probably have some work to do on managing your entity. So all of these things are important. You've got to go a next level deeper, and I agree with you 100%. What if at what they're charging for credit reports and tri-merges and updates and all of the things that single bureau pulls, soft pulls, all the tricks, quote unquote, that we used to use to keep our credit bill low, they've caught on to all of them. So what's your conversion on credit? What if you could convert 4% more? It's hundreds of thousands, if not millions of dollars by the end of the year. You got to measure that stuff. You got to go one, if not two levels deeper than the things that we used to measure.
Yeah, I one of my interviews last week was Jim Deitch. Are you familiar with
Very
Jim
smart.
Deitch
Right.
and
Very smart,
Verde?
Jim. Yeah.
Yeah, and he used a term I hadn't seen before, but we had a conversation. Well, I interviewed him a year ago. It was called Moneyball Mortgage. And by the way, the name of
I
this
remember
series,
that. Yeah.
this one's going to be Moneyball Mortgage 2025 because
Okay.
he's got some new data and
Yeah.
and what he is positioning the industry as volume driven lenders and he has this new position and he's kind of debating is it profit driven or target driven, but where literally we need to become more focused on efficiency targets and that, by the way, drive profit targets. And if
Yeah.
we just started doing that, measuring it, and he's got a whole scorecard. He's actually got him and I, he helped with our ROI analysis. Um,
Yeah.
so if we just did a better job of measuring it, like of course, we're going to have to make some decisions. We're going to have to manage some
Mhm.
processes, but we could literally be profitable right now with these difficult interest rates. So, so what?
I would argue in this marketplace, this is our third year in, you should have definitely returned to profit by now. Absolutely.
What percent of the industry IMBs are at profitability right now, in your opinion?
Well, considering that the MBA's IMB quarterly report has us negative for the last 2 quarters after finally breaking back into the positive, honestly, Dave, I'd say it's pretty gosh damn close to 50-50.
Got it. Yeah, no, I agree. But to your point, or the point I'm trying to make, guys, we could be there now by applying some new ideas and new strategies, which in this halftime report, we will unpack what we believe are some of the things to
Well,
do.
I know what I strive for every day in my job as CEO of Success Mortgage Partners, which as much as I love the MBA and I love it, my job as CEO of Success Mortgage Partners is my number one job. Um, if you take that job, you go back to what we were talking about in the first half with Rocket and Redfin and that universe that they're creating, and me saying that's an opportunity for everyone else. I truly believe that. You've got to adopt that technology. You've got to fight in that arena. We've got the tools to do it. We've got the tools to win. And if you measure these things that you had just mentioned, whether it's Jim Deitch's favorite statistics or Matt Clark's, these are all smart people, right? I know that we do. We've developed quick report cards on conversion ratios, on expense, on revenue produced by loans, to try and make more intelligent decisions. If you do those things, you'll be successful. If you don't do those things, you cannot run your company like it's 2012 anymore. You will get steamrolled.
Yeah. So, and by the way, you're a great customer of Mortgage Coach and Trust Engine. What is your why? Like, why do you continue to advocate and be a partner? What's like the why behind it for you?
I would say two things. Number one, because if we're the ones that educate the borrower, if we're the ones that help them make good decisions, disproportionately, we will be the ones from whom they get their mortgage, right? And I completely believe that. And Mortgage Coach is an extremely intelligent platform to use to educate those borrowers. And I don't have the exact number that Matt has, but I can tell you, unbelievably high percentage of our top 30 loan officers are Mortgage Coach users, and the varying belts and all those kinds of things. Um, and also we are when you talk about that new mortgage economy, right? With Trust Engine and the different platforms that they have and the app, those are the kinds of things you need to present yourself. If you think Rocket is not going to use the information that they get from Redfin to present mortgage options to the users, of course, that's why they spent billions of dollars on it, right?
Right.
So we have the power to do the same thing. Maybe with a little bit different technologies, maybe in certain areas it's not as good, maybe in certain areas it's better, but we have relationships with these people. We have the information. Sometimes we've got to call them and say, "Hey, did you know ABC about your mortgage?" And we're going to tell you it's time for you to get a new mortgage before it's even dawned on you,
Well, that's the
and
goal.
that's right. And we have the ability to do that. And
So
and and that technology is getting better by the month.
yeah, well, it definitely is. Make sure anybody watch this. We just did a webinar actually yesterday. I'll put a link down below in comments where we unleashed and showed our how we're infusing AI into the mortgage coach experience for borrowers. So I know you've already seen that. So closing thoughts, and whether you want to give these closing thoughts as a leader of the MBA, whether you want to do it as just peer to peer, executive to executive, but any closing thoughts you have for anyone tuned into this?
I mean, to me, I would say a couple of things. We can't control interest rates. We can control our actions to what interest rates are. I'm tired of monitoring interest rates. We're in an environment right now where if you work hard, you apply yourself, you can win right now. And I would urge everyone else to think and act the same way. And then, whenever the interest rates and all that stuff finally turns, that's when you really can make even more things happen. But the environment that we're in right now, we can win today. I would say that's number one. Number two, industry wise, we've got to keep our eyes on Washington, D.C. We've already seen tweets from President Trump about Fannie Mae and Freddie Mac and exiting conservatorship. And they're going to take a hard look at this. They're going to take a run at it. And we have to make our voices heard. This is the biggest regulatory event in Washington, D.C., in the mortgage industry since Fannie and Freddie were put into conservatorship. Okay. So it's been 18 years, I think. We need to show up for this conversation. And in order to do that, every single member of the industry needs to pay attention. We all need to join the Mortgage Action Alliance so we can stay informed. That's the grassroots lobbying, 100% free. Just organized by the Mortgage Bankers Association. Everyone just Google Mortgage Action Alliance. It's pretty easy. If you think you're a member, you might not be because you have to renew every 12 months. So go there and renew. But we need to show up because if we don't, it's not going to be good for us. We have a lot of friends and we've worked very hard. We just need to pay attention. So win in business, keep your eye on the ball, and help us win in the regulatory environment as well. It's definitely possible.
So if you're watching this in YouTube, we'll have a link down below where you can log in and get to the Mortgage Action Alliance. Make sure that you're part of it.
Oh,
Uh,
fantastic idea.
Yeah,
Thank you.
yeah. We'll get a link from you and we'll put that below. And participate and donate. It sounds like the lightest thing you can do is you can follow this man. He is giving a lot of time and a lot of energy to our industry. So follow him, like it, share it with people that you think it would create value for them and for our industry. And then be a player in the MBA. Like if you're an executive, show up to the events. I've been to the advocacy day multiple times and I missed this year. And I really regret missing this year. I should have been there. I will not miss next year.
It's a great day if I can just give a plug for it. Dave brought it up. It's called the National Advocacy Conference. It's in April every year. This past year, we had about 400 mortgage professionals, which is excellent. Washington, D.C. We get a lot of there's 535 members of Congress, 100 in the Senate, 435 in the House, and most of them don't know hardly anything about our industry. And I understand that. That's not a criticism. They have to know about healthcare. They have to know about education. They have to know about national defense. They have to know about farming. They have to know about all kinds of stuff, right? But we're 1/6 of the US economy. We got to show up and educate them. And so we invite the ones that are our friends, the ones that know about our industry, to come talk to us. And then on day two, we storm Capitol Hill. We had 440 people on Capitol Hill for 295 Hill meetings last year. It was fantastic. Your voice counts, and that's part of how you make it count.
And I'll just add my experience as someone going to it. Like it is such an incredible experience as an American to go onto the Hill as a lobbyist, get prepped the day before you do it.
Yep.
So you're really getting prepped. I learned a lot. It was exciting. And then going into the House, going into the Senate, seeing
Yep.
how things work in America. I was shocked at the number of 20-something-year-olds that are seems like running our
Yeah.
country. But by the way, they're sharp people. They're really smart people. They're really caring people. But the only way they can really be sharp about our industry is if we show up. So I will be there next year. I hope you guys follow up.
I
We'll have
tell you,
another.
I'm an old poli sci major from Villanova. Same school as the new Pope, by the way, just
Oh
in case,
yeah,
just in
right.
case you wanted to
To
know.
be
And
noted.
yeah, and it is it's I don't mean to get nerdy, but it's like the First Amendment in action on that day. It's a cool thing. It really is. You
Yeah.
should
Well, I
come.
was I
Check it
was
out. I
not a poli sci major, and never really was interested. But I'll tell you what, I loved it. I felt good
Yep.
personally that I was part of the experience, and I would push anybody, check it out. Whether you're C-suite executive, you're a loan officer, get out, donate money, be part of the conversation. Hopefully, you got value from this conversation. If you have not already subscribed to our channel, subscribe today. Make sure you follow this man, and we hope you got value. Take care, everybody.
Thank you. Thanks, everybody.